Hey, TMFG community. Carlo Cancino here with John Iaconetti. And in today's Ask TMFG episode, we're going to be answering an age-old question that we get often from clients. Do RSPs make sense? Why are they causing such stress in retirement? If you've ever worried about running out of money in retirement, you're not alone. And that's why in our video, we'll be breaking down the 5 RRSP tax hacks that take the stress out of spending and help you keep more of your money.
Most Canadians don't realize this, but the way you manage your RSP can create more anxiety than peace of mind. We've seen it repeatedly. People do what they're told, they save, they defer, maybe they wait to 71, only to find themselves paying more tax than ever.
Or worse, they're scared to touch their savings at all because they just don't know how much it is safe after taxes. And that fear keeps them from enjoying their retirement.
But it doesn't have to be that way.
Right.
Stick with us because we're going to show you the 5 tax hacks that flip those worries into confidence. And at the end, we'll share a framework to put all 5 together so you never second guess your retirement spending again. So everyone thinks RSPs guarantee a smooth retirement, but they become one of the biggest stress points for most Canadians.
And here's why, John. First, people think their balance is all theirs, but it's actually not. A $500,000 RRSP might only be worth $300,000 after tax. That's a big reality check. And secondly, those forced withdrawals. At age 71, you have to convert to a RRIF and start pulling money whether you need it or not. And that often pushes people into higher marginal tax brackets.
Yeah, and lastly, old age security clawbacks. RSP withdrawals count fully as income. Go over the threshold and boom, you lose the benefits you thought you'd rely on. And then there's the estate issue. When the last spouse passes, the RSP or RRIF is fully taxed for that given year. So families are shocked at how much disappears due to tax.
What about adding in market risk and uneven spousal savings? Now you've got a recipe for constant stress. It's no wonder why so many retirees live smaller than they need to.
Yeah. So let's quickly break down why this happens.
Okay, forced withdrawals. That's CRA making sure they get paid. And it doesn't matter if you need the money or not, or if markets are down. It's a one-size-fits-all rule. What about OAS clawbacks? It's the same thing. If you withdraw too much, you cross the income threshold where old age security benefits are clawed back.
And the big myth, deferrals. Everyone says wait until 71, but the truth is your tax rate might not be lower than later. In fact, it's often higher when Canada Pension, old age security, and RRIF withdrawals all stack together.
And that's the kicker. You think you're playing it safe, but by waiting too long, you end up paying more tax and eventually leave less for your family.
So what's the good news? These problems aren't permanent. They're just signs you need a better plan.
So John, what can we do about it? Well, let's break it down. Here's our hack number 1. You smooth out your withdrawals early. Don't wait until 71. Start small withdrawals early in your retirement years.
Think of it like spreading out a big meal instead of stuffing yourself all at once. You keep your tax bracket steady and avoid the big spikes later.
Now, our hack number 2. Convert to a RRIF early and gradually. Don't let CRA decide when. Convert part of your RSP before 71, bit by bit. And that's what gives you the control. You can manage withdrawals, split your income, and even use the pension credit once you're 65.
And hack number 3 is use RSP contributions for big one-time incomes. Maybe you have a severance, sold a property, or inherited some money. That income can crush you in taxes, but a well-timed RSP contribution can offset it. So it's not about contributing every year, it's about using your room a bit more strategically when it matters most.
Right. Hack number 4, split RRIF income with your spouse. So if one spouse has a lot more saved, income splitting lets you move up to 50% to the other. That can keep you both in lower tax brackets, which reduces clawbacks and can save thousands each year. It's fairly simple, but incredibly powerful.
Yep. And finally, hack number 5, the RSP meltdown strategy. Now, this is the big one. We've done a couple videos on this one in the past, but this gives you the ability to gradually move money out of your RSP and into your TFSA over time.
Now, instead of building a tax time bomb, you're building tax-free wealth. Your tax-free savings account grows, withdrawals don't touch your income, and your kids inherit it tax-free. And that's the difference between living in fear of taxes and living with confidence in retirement.
So we did discuss a lot. How do you pull this all together? You start by checking your balances, contribution room, and tax picture, and that is your baseline start.
Then, map out when to smooth your withdrawals out and when to convert part of your RSP to a RIF. Also, keep an eye out for windfall years, and you can use RSP contributions strategically to offset them.
There you go. And if you have a spouse, use income splitting to lower your combined tax load. And finally, shift your wealth into your TFSA over time. That's your tax-free engine. That's what you're going to want to continue to maximize over the years.
John, that wraps it up. The 5 RRSP tax hacks that take away retirement stress and help you keep more of your money.
So once again, to recap, smooth withdrawals, early RIF conversions, smart contributions, income splitting, and the RRSP meltdown. Now put those together and you've got yourself a plan that keeps taxes low, benefits intact, and retirement is stress-free.
So if you want help building your full Canadian retirement plan, click the link below. We'll walk you through it step by step.
Thanks for watching, and we'll see you in the next one.